One, go.
Welcome back to another episode of AKC Capital's financial podcast series. I'm your host Shweta. Joining me today is AKC Capital's founder and director, Mr. Aditya K. Chopra. This month we are discussing equity markets and long-term wealth. And today's topic is how to set financial goals you will actually achieve. Most of us have said we want to save more money, but somehow that goal never lasts. So, what makes some people achieve their financial goals while others struggles? Let's find out. Welcome Aditya. My first question is, why do most financial goals fail within just a few weeks?
Good. I think it's a very relevant question, Shweta. So we have two options, whether you are writing and specifying your financial goals or you just have it in your mind or in your head. For example, one can get in a situation, let's say I want to save 5 lakhs in the next 6 months, and it is just in your head, and it's less likely that you'll achieve it, because what's important, are you really doing something about it? So statistically we have seen that people who have specific written goals achieve them almost 80% of the time, and people who just have goals in their mind or in their head and they are just thinking about those tend to succeed only 10% of the time. So you see there is a huge divergence here. So the verdict is very clear that if you write down your goals in detail, there's a higher probability that you will act and hence achieve them in the near term, in the near to medium term. So essentially when you're writing or specifying a goal, then you're converting your aspirations into core commitments. So to sum it up, specificity creates accountability, and accountability creates discipline, and it is discipline that creates wealth. I think that's where I would like to conclude.
So, my next question to you, what makes a financial goal smart?
I think it's a very good question. So the key word here is smart. So what does smart stand for? So the S is specific. The M word mean measurable, and A is achievable, R is realistic, and T is time bound. I think that similar strategy you could apply to your financial goals as well. So let us take an example. Let us say an individual wants to accumulate, let's say, 2 crores by the age of 52, and let's say he's currently 32 years of age, so you're kind of looking at a 20-year time horizon, right? So these goals are S is specific, and what you need to do to achieve this goal is to really go back in time, and assuming a long-term CAGR of 12% and a time horizon of 20 years, you would need to do an SIP of approximately 22,000 rupees per month. So this is making the goals measurable, and achievable is there's a certain time horizon we are looking at to achieve those goals. And I think the key word here is also realistic, because are these goals realistic? Well, it also in this case, hopefully the person has the income earning capacity to make those investments. So he's realistic about these goals because he is earning to set aside those savings to invest. So that's important, realistic, and then being time bound as to when you need this. So I think when you look at this smart philosophy, you can plan your financial goals better in a realistic manner, and achieve those in a time bound manner. So we feel that this is a good strategy to apply, and this could always be a starting point to achieve your financial goals in the long run.
But you know, sometimes a financial goal can feel too big. I want to ask you, how can someone break a large financial goal into smaller, more achievable milestones?
Well, idea is to really, create specific milestones along the journey, right? So, let us take an example that you need to pay 5 lakhs towards a home, 25 months down the line. So how would you approach this situation? So my suggestion is that you could, start saving, 20,000 per month from today, and then when you do this systematically month after month, then you suddenly realize that after 5 months you have already reached one key milestone of 1 lakh, and then at the end of 12 months this becomes 2.4 lakhs, and then at the end of 25 months it is 5 lakhs. And mind it, here we are not, here we are ignoring the compounding in your returns as well. So essentially, a person would be, let's say, putting it into a liquid fund or in a short duration fund, which is, let's say, giving you 6.5%. So your money is also growing at a certain pace every month. That compounding is happening. So you would be actually getting slightly more than 5 lakhs at the end of 25 months, because the money is also growing at a certain CAGR of 6.5% per year. So having milestones and breaking them down into sub milestones is the key. And research shows that when you achieve one milestone, you get motivated, and the mind is predisposed to positively predisposed to achieve the next milestone, and it gets you the energy to move forward. So I think that's where my input would be.
Let's end with one final question. How can someone stay motivated when their financial goals are still years away?
Well, I think that's a very, very pertinent question. So my suggestion here is that you could probably start by naming that financial goal that is really important to you. Let me take an example. For example, it's your daughter's education corpus coming in 2036. Now, you've named it daughter's education corpus rather than some general name like general savings. So obviously, when you're creating a specific name, it creates a very high emotional, affinity to that financial goal, and hence a higher probability to achieve that. Second thing would be that when you've named your financial goal, in which case we say where the name was Daughter's Education Corpus 2036, you could share that financial goal with a person that you trust 100%, right? So when you share that financial goal with that trusted person, it creates a higher accountability on self to work harder to achieve that goal. And statistically, we've seen that people who share their financial goals with a trusted person have a 65% higher probability of achieving those goals. So these two strategies could be combined to achieve a goal which seems really far away in the horizon. And like I was telling you in the earlier part of this conversation, is that you could combine that with other small things like writing your financial goal and then naming it appropriately, right? And that in turn would create higher accountability and discipline, and eventually a higher probability to achieve your financial goal. And essentially, if you see in a larger perspective, this is exactly what most accomplished wealth managers are doing to achieve financial goals for their high net worth clients. It's the same strategy, but this is more simply put, and would definitely go a long way to help you.